Hey everyone, welcome back to Corporate Decoder, where we try to make sense of the complex world of finance and unlock the stories hidden within company reports. Let's dive deep into Euronet Worldwide Incorporated's 2025 annual filing. See what they have to say about their financial health and what it means for their future. This is a big one, folks, so buckle up because we are about to decode some serious numbers and, more importantly, what they actually mean to the company and its investors. Before we start, if you appreciate getting straight insights from corporate documents without the jargon, make sure you are subscribed. We also have a Discord community linked in the description below where we break down these filings even further and have some great discussions, so join us there. Alright, let's get straight to it because Euronet Worldwide Incorporated is a giant in the electronic payment and transaction processing world. They operate across three main segments: electronic funds transfer or FTPay and money transfer. Think ATMs, prepaid services, and global money transfers. Basically, they help move money in almost every way the world depends on now. This report covers their 2025 fiscal year, and it is packed with financial data and strategic insights that tell a compelling story. First up, the top line revenue, total revenues for 2025 hit a cool $42 billion. That is a solid increase, up 64% from 2024. The company credits this growth mainly to more transactions across all three of their business areas. That is good news. It shows their core business is still expanding. Digging into the segments, the money transfer segment is their biggest earner, bringing in $178 billion in revenue for 2025. That is up 57% from the previous year. This segment is powered by RIA Money Transfer and XE, and it is handling more direct-to-consumer digital transactions, which is a smart move towards the future of finance. The F processing segment, though smaller at about $128 billion in revenue, also saw healthy growth of over 10%. This is their ATM and POS terminal business. This boost is thanks to more international transactions and the expansion into new markets. And then there is ePay, their retail payment solutions segment, which brought in $118 billion in revenue. This segment is growing slower, but still up 32%. The real story here is the shift even more towards digital media products. Rather than just prepaid mobile airtime shows, they are adapting to changing consumer habits. Now let us talk about profitability. Operating income across the company came in at $529.8 million, up 53% from 2024. This indicates that while revenue is growing, their costs are also being managed effectively. The money transfer segment remains the most profitable contributor to operating income. The bottom line net income attributable to Euronet shareholders was $395 million, an increase from $30 million in 2024. This shows a steady improvement in profitability, and while the per share increase might seem small, it is a consistent sign of financial health. A significant portion of their cash, almost $18 billion, is held outside the US. This is important because it means they likely reinvest this abroad to avoid negative tax consequences if they were to bring it back home, and with 76% of their revenues coming from outside the US, a strong dollar could actually hurt them while a weak dollar helps. Looking at their debt, Euronet has a substantial credit facility. They increased it to nearly $19 billion and extended its maturity to 2029. This gives them a lot of financial flexibility to fund operations or potential acquisitions like the CoreCard Corporation deal they closed in October 25. They also raised $1 billion through new convertible notes due in 2030. This is a strategic move to get capital while potentially offering equity upside if the company does well. This is a common strategy for growing tech companies. Euronet has been actively buying back its own stock. They repurchased over 3 million shares in just the last 3 months of 2025 alone. This signals confidence from management and can boost shareholder value. Now, no company is without its risks, and Euronet faces a few big ones. Government regulation is a major one, given they operate in so many countries with different rules. Cybersecurity is another huge concern for any company handling financial data, and they are also exposed to global economic ups and downs, currency fluctuations, and the general competitive pressures in the financial tech space. They have a considerable amount of goodwill on their books, over $1 billion. This comes from past acquisitions, and while they are not impairing it currently, it is always something to watch for if those acquired businesses underperform. Currency exchange is a big deal for them, with over 76% of revenues from outside the US. A 10% swing in exchange rates could impact their net income by over $110 million. They do use derivative contracts to manage some of this risk, but it is still a significant factor. Euronet stresses its commitment to cybersecurity. Their CTO reports directly to the CEO, and they have dedicated teams and regular board updates focused on this critical area. This is absolutely essential for a company dealing with financial transactions. Their internal controls are also deemed effective by management and their auditors, which is standard but important for investor confidence. So what is the story here? Euronet Worldwide Incorporated is a robust and growing company. Their financial results show consistent revenue and income, growth driven by strategic expansion and a focus on digital transactions. They are actively managing their debt and returning capital to shareholders through buybacks. However, they operate in highly regulated and competitive global markets where currency fluctuations and cybersecurity threats are constant challenges. Their recent acquisitions like CoreCard and their ongoing investment in technology and security position them well for the future, but vigilance will be key. The company appears to be navigating these complexities, effectively showing resilience and ability in a dynamic sector. Overall, Euronet is a strong player in the global payments landscape with a clear strategy for continued growth. Alright, that is our breakdown of Euronet Worldwide Incorporated's latest filing. What do you think about their financial performance and their outlook? Drop your thoughts in the comments below. If you found this deep dive valuable, hitting that like button really helps us out. And make sure you subscribe for more corporate insights like this. And hey, don't forget to check out our Discord community, linked in the description for more in-depth discussions and direct access to our analysts. Thanks for watching Corporate Decoder. See you next time.